morning to all traders. Welcome to this Wednesday's marketinsights videos on metals and energies. We're going to talk about gold, oil, natural gas, as well as silver today. Obviously, we all saw what is really happening with gold. The prices are reaching the 1800s barrier. This is a probably like a decade high or so, but we haven't yet broken that level. It still flirts with this. We don't know. We're not sure if it's going to actually take effect or not. We just have to wait and see how things pan out. The truth is that with coronavirus cases increasing and other sort of risks coming into play, we might see the gold break into fresh highs very, very soon. And the other risks that I wanted to talk about are, well, of course, we had the new forecast now, projections. The ECB lowered expectations for next year, if I'm not mistaken. Now, the unemployment is likely to reach levels that we haven't seen since the Great Depression. Apart from that, then we also have the inflation expectations changing. And this is, of course, looks like it's now shifting the gold from a safe haven status more to like a inflation hedge product, right? So that seems to suggest that, well, because we're expecting inflation to start rising as the Fed also supported, then we might see the gold really break into fresh highs if the situation persists. Now, if we take into consideration that there is tensions between UK and China around the 5G, as well as new restrictions from the US on Chinese officials over Tibet, then well, there is only one way to go. Oil, on the other side, we had the API yesterday. Not really what markets expected, but regardless, the oil prices remains at elevated levels, and that's because, of course, today we have the most important, more heavy EIA coming as well. If this confirms yesterday's results, then most likely we're going to see the prices of oil falling. Now, on gold, with the structure here ending wave 4 in a simple 3, I'm looking at this as an ending triangle. Okay, so I'm expecting this top trend line to reach fresh highs above the 1800s, and from there we can start looking for prices to start moving lower, right? Now, whether this is going to be coming soon or not, we do not know yet. And whether this is going to take this structure or not, we do not know yet, because this could literally be like an ABC over here. That could be 1. Then we could have wave 2 down here, wave 3, wave 4, and wave 5, right? Again, an ending triangle and a diagonal. Whatever the case is, because of the corrective structure of this latest move from the low of 1667, well, I believe this is going to be an ending diagonal. Okay, now in the short term, we might see a decline in the short term, okay, missing the 1800s because it's a very, very, very strong psychological level, and start moving lower. Once we get to the 1740 or so, perhaps we can start looking for fresh close. But until then, well, I don't really think we're going to see fresh highs above the 1800s, but I might be wrong. Oil, we talked about this being an A, B, and a C, right? So if we go a little bit closer, we're expecting this wave 2 to end down here and then up here and then start moving lower for wave 3. Well, it seems that this is now a leading diagonal, and we had wave B and C done, right? This is wave 2 and moving lower for wave 3 is a question. Well, because this also looks corrective, okay? This is one scenario, of course, with a multi-structural degree to the downside. If that's the case, then we're going to see prices really breaking below 39 and then the previous wave 1. If not, it might be a case where this is a W, we're going to get an X, and then we're going to get a Y, and then start moving lower from there. Okay, so this is going to keep prices in a range for at least another week or so, and then start looking for price to move lower. Because in the medium and longer term, I'm looking for this being a wave A, B, and a C, part of an ending diagonal, multi-year ending diagonal wave 4, which is, well, wave C. I want that wave C to be taken out above 42 or so, and then go down in the longer term for wave 3. Since I'm seeing this signal as well on the RSI, we might get a wave C ending a little bit higher. But then, if that happens, most likely we're not going to have a W, X, and Y, because then wave Y, even if we get the X, the wave Y, where is it going to end really? You know, it's going to have to break above this move. So since we're expecting a 5-wave move over here, you know, because we saw this as a flat, expanded flat, then, well, chances of that happening then really wouldn't be less of an option. Silver. Looking at this, well, I'm still looking at this as a flat, but due to this structure over here, ABC, ABC, and what, 1, 2, 3, 4, 5, right? Towards 16, and then move higher for wave 5, which is intermediate wave 1 around 1977 or so, then wave 2, 3, and shoot higher. Well, I don't like this structure. So it could be a case where this is W, X, and we're going to see another way down for Y, for wave Y, because this looks impulsive, or it can be a complex correction, right? Rather than an expanded flat. And then, okay, we expect price to move lower towards the 17 level, okay, at least wave A, and then move higher again. We could get a fresh high up here, and that would suggest that might be just a simple ABC, and this is 1, 2, 3, 4, and 5 as an ending diagonal. Then natural gas, quickly. We talked about this move up here becoming an ABC for wave 4, right? Because in the longer term, we see more downside. And with this break now down over here, I see this as a false break. That means I see that as an A, B, and a C, an expanded flat. Okay, so we've got an ABC, which is a leading triangle. Well, ABC down here, and 1, 2, we are in the midst of wave 3. Wave 3, obviously, as you can see, is very impulsive, and it's multi-structural. So we're going to see 1, 2, probably 3, 4, and then 5 or something like that. And then we're going to take out potentially the 2 level or so, and then start looking for price to move lower. Now, it could be a running flat. So if it's a running flat case, then we might just stop around 1.8, even where we are at the moment, 1.83 or so. But I see more upside here, 1, 2, 3, sideways, 4 and 5 at least. And with this signal on the natural gas as well, we might see these sideways markets taking place sooner than expected.